When it comes to investing, especially investing in dividend stocks, it's important to understand that dividend investing is a total return investment strategy. It's not about dividend income in year one. Dividend investing is a process. It's more about that dividend income in years 5, 10 plus. From that standpoint, I get comments all the time. Why would you invest this much money only to receive X amount of dividend income? Again, it's not about the year one dividend income. It is a process and it takes time. As such, in today's video, we're going to be focusing on investors that are searching for income, especially as interest rates come down. These stocks with high yields are going to look that much more intriguing. And that's exactly what we'll be doing. 3 stocks, huge yields. Each and every one of these stocks has a dividend yield in excess of 5%. One of them is closing in on a dividend yield of close to 10%. So make sure you stay tuned throughout the entirety of today's video. And before we begin, do me a huge favor. Click that like button down below, subscribe to the channel, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now. Check out the link down in the description below. All right, let's jump back into today's video, taking a look at 3 dividend stocks, all who have dividend yields in excess of 3%. And as we progress throughout the list, we're going to increase the dividend yield each and every time. So we're going to begin with the lowest dividend yield, which isn't that low at all. And that high yield stock is Pfizer, stock ticker PFE. Pfizer was in the news a ton during the pandemic. But since then, those pandemic-related sales have all but been washed away. Now we're looking at the Pfizer of old. And the company still has a loaded pipeline. One you want to keep an eye on because they have potential to have a few blockbusters in there. Looking here at Pfizer, the pharmaceutical giant, they have a market cap of $168 billion. And over the past 12 months, as those pandemic-related sales have been washed away, the stock price has been washed away too, down 25%. However, over the past month, shares have rallied more than 11%, showing a potential bottom in the stock as valuation was and remains extremely low, which we'll look at here in a second. So again, pandemic sales are gone. Pfizer of old, still a loaded pipeline with a number of high-quality drugs that could each be blockbusters down the road. And yet, the company still pays very high dividends. Again, this is the lowest yield of the 3 stocks today, and still, it sits at a yield of 5.7%, nearly a 6% dividend yield, to go along with its 5-year dividend growth rate of 5% and 13 consecutive years of dividend growth. So now let's take a look at how much dividend income would that equate to in year 1 and then down the road in year 10 if we go through this compounding process. We're going to invest $50,000 right away. So looking here in year 1, we would earn dividend income of $2,850. And if we reinvested those dividends for 10 consecutive years without adding any additional money into PFE, our year 10 dividend income would increase to nearly $6,700. Now let's say though, go back and let's say we added $400 a month to this position while also reinvesting our dividends. By year 10, we will have annual dividend income of $10,000 on this single stock. Slower dividend growth usually comes along with higher dividend yields. So you get a pop in the income quicker, but the dividend growth is slower. Now let's take a look at valuation, where analysts are expecting the company to generate 2024 EPS of $2.32 per share, which equates to a PE multiple of 12.7 times. For comparative purposes, over the past decade, shares of PFE have averaged a PE multiple of 13.8 times. So there you can see the stock, although you get a very high dividend yield, the valuation is still quite low. And that leads us to high yield dividend stock number 2, which is Enterprise Products Partners, stock ticker EPD. EPD is a midstream company, the largest midstream company here in North America. And to put it into layman's terms, think infrastructure to export natural gas. The company has a market cap of $62 billion, and over the past 12 months, the stock is up 8%, with much of those gains coming here in 2024. If you're looking for a combination of safe dividend and a high yield, EPD is a great spot to look. This stock isn't going to go crazy in terms of growth. Always have a strategy on why you're investing in particular stocks. Some stocks are going to give you that growth. Some stocks are going to give you high yield, and some could be right in the middle. EPD is definitely going to give you a lot of income, not necessarily a ton in terms of growth potential. Let's take a closer look at income, and EPD is definitely a high income play. And again, as we progress through this list, the yields only go higher. And as you can see, EPD currently has a dividend yield of 7.25%, with a 5-year dividend growth rate of 3% and 25 consecutive years of dividend growth. So how much in dividend income would we get paid investing $50,000 in shares of EPD? Well, in year one, we would earn $3,625. If we reinvested those dividends for 10 years without adding any additional money into EPD, our year 10 dividend income would be $7,880 roughly. Now let's say we go back though, and we do add money on a regular basis, $400 a month to this position, while also reinvesting those dividends. By year 10, we will have annual dividend income of $11,550 on this single position. Before looking at valuation, I should note that EPD is a master limited partnership, or an MLP. They enjoy the benefits of a private partnership, but they also enjoy the liquidity of a stock. So the MLP doesn't pay corporate taxes itself. Just like a partnership, all profit and losses are passed through to the partnership, which is essentially you, the stockholder, or technically the unit holder. Now let's take a look at valuation, where you can see analysts are expecting the company to generate 2024 EPS of $2.71 per share, which equates to a forward PE multiple of 10.4 times, which is quite favorable to their 10-year average of 13.9 times. Analysts are also quite bullish on the stock, giving EPD an average 12-month price target of $33 per share, implying 18% upside to go along with that 7% plus dividend yield it pays out. And that leads us to high yield dividend stock number 3, which is British American Tobacco Company, stock ticker BTI. Now I understand right out of the gate that this particular stock isn't for everyone. And there's been a lot of pessimism around the tobacco industry as a whole. But when you look at this stock and combine its extremely high dividend yield, extremely low valuation, and some of the growth levers that it has to pull, it could be intriguing for some investors. Looking here, you can see the company has a market cap of $70 billion. Over the past 12 months, though, shares are down 7%. However, the past month has seen a bit of a turnaround, with shares up 4% and up 5% year to date here in 2024. Like many other tobacco companies, close competitors of BTI, like Philip Morris or Altria Group, have been transitioning away from traditional tobacco and going more to smokeless products. Right now, Philip Morris has nearly 40% of its revenues coming from smokeless tobacco products. Altria is starting to ramp that up as well, and so is BTI. This could be a huge growth driver for BTI. We've already seen it with Philip Morris, as its smokeless category, which now equates to 40% of total company sales, grew 21% year over year. That's going to become a bigger piece of the pie every single year, and more growth from that aspect. BTI is still getting there. Let's take a closer look at that income now, and this is our highest yield on today's list. As you can see, shares of British American Tobacco Company pay a dividend yield of 9.3%. They have a 5-year dividend growth rate of 3%. So not much in terms of consistent dividend growth though, not much in overall 5-year dividend growth rate, but you get a huge dividend yield. So how much in dividend income would we get paid for investing $50,000 in shares of BTI? Well, in year one, we would earn $4,650. If we invested those dividends for a decade straight without adding any additional money into BTI, our year 10 dividend income would be $10,150 roughly. Now let's say we do add $400 per month for 10 straight years, while also reinvesting those dividends each and every year. By year 10, we would have annual dividend income around $14,600 on this single position. Big time income payments that are going to continue to compound over the years. Not much in growth, but a lot of income. Now let's take a look at valuation. As you can see here, analysts are looking for the company to generate earnings per share of $4.59 per share in 2024, which equates to a forward PE of just 6.8 times. Yes, you heard that correctly. Mid-single digit multiple. Over the past decade, shares of BTI have traded closer to 12.2 times. At a mid-single digit multiple, you are essentially implying no growth moving forward, which is the case in 2024. But the growth is expected to reignite in the coming years with the hopes of smokeless tobacco products taking off, at least to some degree. Entering at a low valuation while also getting paid a high dividend yield at the same time to wait for that to play out might be intriguing for some of you income-oriented investors. So there we looked at 3 high-yield plays. We started with Pfizer, which had the lowest yield, but not all that low at all. And then we transitioned to a master limited partnership with EPD, and we ended with BTI, which is a tobacco company from that standpoint. In the comments section below, let me know, do you own any of these 3, and which would you be the most comfortable entering into today at both the yield and today's valuation? And if you haven't done so, make sure you smash that like button down below, subscribe to the channel, and we'll see you in the next one. Take care.